Good morning, good afternoon, everyone. Thank you so much for being with us today. It is Wednesday, August 11th at 9 a.m. Pacific time, noon Eastern, and we are here to discuss Bitcoin. We're also going to discuss Bitcoin and this infrastructure bill that is just going through the Senate. I'm Rachel Neighbors. With us today, of course, is our founder and CEO, Jeff Neighbors, and also Eric Restrepo on our team. As we're getting started here, we like to do a quick tech check. In the chat on this side of the page, just let us know, can you see us? Can you hear us? And as a quick reminder, it is usually best to join these trainings from a desktop or a laptop computer. They're really optimized best for desktops and laptops. If at any time during today's training, the audio or video gets a little bit funky, that can usually be fixed just by refreshing your screen. Okay, awesome. Well, there's people here that are joining us from all over the country. I think we've got some people from around the world as well. Glad to know that you can see and hear us. So let's go ahead and dive right in. Jeff, as we're getting started here, just a quick primer for those of us that are maybe not familiar, been living under a rock for a while. Take us through, what is Bitcoin?
Sure. Yeah, so I think for today, what we can do is we can just cover the 3 points that everybody wants to know, which is number one, can you see that there? What is it? Number two, does it work? It works better than my handwriting, I can tell you right now. And number three, can I do it? So really, anytime that you're looking at something, that's what you really want to know. What do we got here? Does it work, and can it work for me? Can I do this? So let's just dig right into what is it. By no means is this meant to be a comprehensive thing. We're all really kind of discovering what Bitcoin is. But to put it really simply, Bitcoin is, from our 8 years of research and allocating to Bitcoin with our portfolios here at Neighbors Group, and experimenting with Bitcoin. I also have a crypto hedge fund that I manage. Through that 8 years of experience, Bitcoin is one of the most likely candidates for the next money. Now, if you hear the next money, you might be wondering, what do you mean the next money? What's happening to the current money? Well, if you look at history, which we have done, deeply, we've done thousands of hours of research in this area. What we find is a couple of things. Number one, the dollar is something called a fiat money, and if you look throughout history, fiat monies. Can you guys hear me? Okay, I think actually my mic isn't even plugged in.
Yeah, we can hear you, but I think it was going through. That sounds much better, actually. Much better.
Plug the microphone in, very helpful. Okay, so
we have to do our own tech check.
Yes.
On ourselves.
Yes. Are we surrounded by tech? Check. Do we know how to use it?
Sort of.
Pretty sure we do.
Sometimes.
Yeah. So when we look throughout history, we found that this fiat money is something that has been done over and over again, and that most fiat monies that have ever been created aren't around today because there's actually a historical precedence of fiat monies ending. And so we thought that was pretty interesting. So the dollar is a fiat money. All historical fiat monies have eventually ended. The other thing is that there's a lot of money printing going on, and people are wondering, like, how can we print this much money? And is it good? Is it bad? The reason we can print this much money, like this infrastructure bill, for example, that we're going to talk a little bit more about later, it's not actually funded by taxes. In fact, the government isn't actually funded by taxes either. The government is largely funded by money printing. So, we always end up hearing these questions of, if we can just print money with no consequences, why do I even need to work? Why does this government even need to collect taxes? And so these can kind of be some big questions, but the thing that we always run into when we ask these big questions is that we have this special status with the dollar called the reserve currency status. And the other thing that we found is the reserve currency status doesn't last forever ever either. I believe we are the 6th world reserve currency. And just the kind of geopolitical climate ends up kind of putting this crown on different countries, the Netherlands and France and England and the U.S. now. And we have this crown, but it's a crown that always eventually moves to another money. So I think the first thing to understand is that the dollar and all fiat monies are temporary. They have a start point and they have an end point. So that's kind of the first thing to understand, because if you don't know that the dollar has an end point, then you would think there's not going to be a new money, because the dollar's been the money for the world every day of all of our lives, until it's not, right? So there is an end point. And if we look at fiat money, the important thing that we can kind of recognize is that it's a little bit slanted, but is that there's an infinite supply of fiat money. In fact, there's a famous interview from a couple of years ago where someone from the Federal Reserve was on, I believe it was 60 Minutes, and they just, they said, well, what about, people are worried that we're going to run out of money, and they just plain said, the Federal Reserve has an unlimited amount of money. We can print money and we can make more. There's no limit to that. So we have this infinite money supply. And Rachel, last night from the channels there in Slack, maybe you can find the chart that has 2 lines, the red line and the blue line chart, and you can bring that up.
Sure.
So what's really interesting, when there's an infinite money supply of dollars, then that means that the money supply is always growing, because most of the money that exists out there is debt and has to be paid back, but it can't be paid back without printing more money. So it ends up being this kind of infinite growth of the money supply. Let me know when you have that chart ready, Rachel.
Got it.
Great. So this is really interesting. If you look at this red line, this is the growth of the S&P 500, or kind of like, if you just want to talk about the stock market, this is the index that it's our go-to. And so it's up, almost 200% since 2008. But during that same time, the supply of dollars, or the Federal Reserve's balance sheet, has grown as well. And if you divide the growth of the stock market by the growth of the Fed's balance sheet, what you find is that in terms of a sort of adjusted value for inflation meaning money printing, not consumer price goods. That's a big confused topic, right? What you find is the stock market in truly inflation adjusted terms is lower than it was in 2008. We did not have a genuine recovery in stocks. What we had was a genuine stimulus in the money supply. We had, thanks for bringing that chart up, Rachel. We can make it smaller now. Thank you. So what we have is this scenario where the money supply is growing at a tremendous rate, and all assets are going up, right? In your real estate market, what's happening to housing prices? Is it because the average household just woke up with, just a lot wealthier? Not necessarily. Everybody's waking up with more money, and that's making prices go up. That's what we think of as inflation, or you could think of it as dilution, right? If you have your pile of money right here, whether it's your retirement account, your solo 401k, your self-directed IRA, your anything, your taxable brokerage account, if you look at your pile of money, and if you think about it as, I don't know how far over here you can't see that far over there. If you think about it as like a pie chart, is the whole money supply, and then your slice is your slice. Every time the Fed prints money and doesn't give it to you, your slice gets smaller. And this is just kind of the system that we're stuck in. There's a lot of people who think there's just like some giant conspiracy theory and some sort of like lizard alien people in Congress are here to enslave us and all of that tinfoil hat type stuff. And that's interesting for entertainment. But I think in the real world, most people don't really know how money works, even at banks, even in Congress, even in the Pentagon. Most people just don't know how money works because we're in a big experimental monetary system. So in this experimental monetary system, the money supply is going up. All asset prices measured in that money is going up like clockwork, not necessarily in real value. And then all of a sudden, you've got this thing coming along called Bitcoin. And Bitcoin, first and foremost, if we want to answer the question, what is it? Bitcoin is a finite supply of a new digital kind of money. The other thing that Bitcoin is it's the world's most secure computer network. So Bitcoin has never been hacked. The hacks that you've heard about are of exchanges that bridge between Bitcoin and dollars, and it's that bridge that gets hacked. Bitcoin itself has never been hacked. Bitcoin's uptime is better than the Pentagon servers and the White House and FBI's web servers. So what we've got is this really interesting kind of intersection of a finite supply during a time where all the assets are measured in a money that has an infinitely growing supply. And so what you end up with is you end up with all assets going up in value, but Bitcoin going up in value faster. When other assets are going up in value, they're just reflecting their adjustment for the money printing. When Bitcoin's going up in value, it's actually capturing that dilution or that inflation at a higher rate. So, for example, since 2009, stocks are up, about 200%. Since 2009, Bitcoin is up about 40 million%. That's a pretty big difference. So this is why you have major investors like Paul Tudor Jones calling Bitcoin the fastest horse. It's the fastest horse because we have infinity dollars in existence, and we have only 21 million Bitcoin in existence. So if you're pricing everything in dollars, then things can get kind of confusing and you get a certain perspective. If you're pricing everything in Bitcoin, what's happening is everything in the world is getting cheaper because Bitcoin is actually a savings technology. So if you think about, I don't know if you guys can see that, maybe a little bit. If you think about a bank account that just has dollars, it's kind of like a bucket with a leaky hole in it. It has a negative real return. The interest rate that you're getting in that account is much lower than the rate of inflation. It's much lower than the rate that stocks have to go up just to kind of sort of break even with regards to the money supply. So Bitcoin is this basic math equation of infinity is the numerator, 21 million is the denominator, and this is why Bitcoin is capturing value. It's kind of sucking value out of the legacy financial system at a faster rate than anything that we've ever seen. So we're in this period. So you could basically say, what is Bitcoin? Bitcoin is the most likely candidate for the next global money, the next standard, the next global reserve currency. And if Bitcoin becomes a global reserve currency, and even if it doesn't, there's a lot of potential upside just based on this simple equation: infinity divided by 21 million. Infinity divided by 21 million means that Bitcoin is actually designed to just go up and up. It's not a mania of speculation that's making it go up and up. It's a mania of speculation that creates temporary bubbles. Like we had a bubble at $19,000 Bitcoin back in 2017, but it popped and now we're above $19,000 Bitcoin. So you have temporary bubbles in the price, but it's not on its way down, as you can see from that chart. And we'll give you some tips and tricks on how to look at a chart that really is eye-opening in a little bit later. Okay.
Hey, Jeff, I was wondering if I know we have a presentation here that we want to also stick to, but we have a great question from one of our attendees.
Sure.
So
Yeah, we want to
Kairos,
ask questions at each of we have 3 sections. Go ahead with the what is it questions.
okay, so Kyra says, you say Bitcoin is finite. Please explain mining for Bitcoin and how that affects how finite Bitcoin is.
Sure. So, we're going to stay pretty high level here and not get into super big details. So we'll kind of give you the takeaway point of what your question is talking about. So, Rachel, if you can actually just pull up the chart, you can Google it for Bitcoin emissions schedule.
Yep.
So with Bitcoin, what we have is there is an inflation rate of Bitcoin. So we don't have 21 million Bitcoin right now. We have about 18 million Bitcoin. So most of the Bitcoin has been mined, and it's going to take between now and the year 2140 to mine the remainder. So, right now, the dollar inflation rate, if you look at the past year or two, is, as far as we know, maybe like 30, 40%. Remember, we want to, if you're a doctor, you want to look at root causes of health problems. The actual historical definition of inflation is money printing. The sort of talking about the consumer price index is actually a distraction. That would be like a doctor looking only at symptoms, right? So the consumer price index is a symptom of monetary inflation, which is expanding the monetary base or the Fed's balance sheet. So if you look back at 2000, do you have another one maybe from blockchain.com that shows the years? That one is a little bit more confusing. Maybe you can find a simpler one.
Okay, one moment. Are you looking for hash rate or?
Bitcoin emission schedule.
Okay, I'm looking for that one, but I don't see it yet.
Bitcoin supply chart.
Okay.
And blockchain.com has some pretty simple ones.
Okay.
And
I'll look that up.
Yeah, while you're doing that, you can make your screen smaller.
Okay.
So, basically, well, I'll tell you right now, it's basically just looks like this, right? So in the early days of Bitcoin, the supply was increasing greatly because it was starting from zero. And now we're at a point where the inflation rate is only a couple of percent. So the inflation rate, the rate at which Bitcoin supply is increasing is less than gold, and it's way less than the dollar. With these, at this point, it seems to be tens of trillions of dollars and derivative currencies that are based on the dollar being printed. So that's a massive difference. So when we say it's finite, we mean that it's capped, and we know exactly how many Bitcoin there are at any moment, and the increases right now are extremely negligible. Any other questions on the what is it before we talk about does it work?
No, I don't think we have any more questions there.
Well, let's give it a moment because there's a delay. When we say something and when they hear it, it could be 20 seconds. So if you have any questions about this, you can click ask a question, or you can ask it in the chat on the right. And after a moment for the delay to work through. Okay. Excellent. So then we can come to does it work? And it depends. In other words, another way to say that is, what does it do? What does it do? What does it not do? What it doesn't do is it doesn't just stay at the same exchange rate with other currencies and assets. So a lot of critique is on Bitcoin for its volatility. Its volatility is actually just something that you get when you have a free market and an asset that's new and under $1 trillion market cap. So that's not what it does. What it does, though, is the network itself processes transactions without a people-based authority. So the network processes transactions without a bank or a banker, without a government or a governor, really without any people at all. There's actually no people involved at all in processing the transactions. It's very interesting. You talk about miners. You might say, but aren't the miners processing the transactions? Well, the miners themselves are actually computers. The people just own the miners. And the computers can only do one thing, and that's mine Bitcoin. So that's part of the technological innovation here, is we actually have this innovation where, if you have, this is essentially like a computerized alternative to the Federal Reserve. And you might be thinking, okay, well, the Federal Reserve, they set monetary policy, they set interest rates, they decide how much money to print, they do all of this stuff. And so the Federal Reserve essentially has discretion. They have discretionary authority where people, 12 people actually, can meet in a room and make a decision, and the money supply can go up or down because of that meeting. They can decide to change the interest rate. Bitcoin is, instead of being discretionary, Bitcoin is rules-based, right? With the Federal Reserve, the 12 people in the Federal Open Market Committee that meet and decide on monetary policy, they don't have to follow a rule book. They have discretion to make the decision themselves. With Bitcoin, we have rules written in computer code, and anybody who's a coder, a computer programmer, can look at the code and see what it says. These are the rules that say there's never going to be more than 21 million. Here's how the miners get paid. Here's how the mining works. Here's how, even if somebody controls the majority of the miners, they don't control Bitcoin. There's a lot of real secret sauce in the actual technology that only computer programmers can see. But computer programmers have been able to look at this out in the open for almost 12 years now, and they're amazed. They're like, I can't believe that this actually works. So it's a rules-based system that processes transactions. It processes more transaction volume than PayPal. The other thing that it does is it's a network that secures, wish you could secure my writing. It secures itself. So it's a processing network that processes itself, and it secures itself too. This is very interesting because essentially, how did we get here? Well, we got here because tens of thousands of computers and people all around the world, they cobbled their computers together and ran this program called Bitcoin. And as it turns out, it's like strength in numbers, right? As it turns out, by these tens of thousands of people hooking their computers up together, they have this computing power, what's called the hash rate, that actually makes it the most secure computer network in the world. So governments are centralization of authority and power, and they can tax, and they can take all these resources, and they can create security. Oddly enough, a whole series of volunteers all around the world with no affiliation to any government have the most secure network in the world. And what this means is that nobody has ever hacked it. And this is very, very unique because, again, even the White House and the FBI, they can't keep their computer servers up. If a hacking group decides we're going to take down FBI.gov today, then FBI.gov is going down today. You may have heard of that hacker group called Anonymous, that they do that when they have a message and they want to say something to get attention. So most of our internet and computer infrastructure is such that things can be hacked if a group of hackers wants to do it hard enough, wants to try hard enough. They've never hacked Bitcoin, and it's the biggest, what's called honeypot for hacking, where it has the biggest reward for hacking. If somebody hacks Bitcoin, they can get hundreds of billions of dollars in value. So they're trying, and the fact that it's not hacked every day, day after day, it's never been hacked, basically shows that it's the most secure network in the world. So the next thing that it does is it captures value. So it works to process transactions without people's involvement. It works to secure the network without people's involvement. And it captures value, not based on what people tell it to do or anything like that. This is essentially, you can almost think of this like a natural phenomenon. Obviously, it's not organic like a bird or a moose or a deer, okay? But it's natural in that people can't control it. It was a creation that back in 2009, the creators of Bitcoin turned it on, and the moment after they turned it on, there's not like a person that can control it. Even the president of the United States can't control Bitcoin. Neither can Congress. They can't. We'll get to the infrastructure bill here in a minute. Congress can write laws about the people around Bitcoin, like exchanges, brokers, and whatnot, but they can't write laws that affect the actual Bitcoin software itself or the network itself. So let's talk about captures value, because for investors, when we hear of an asset that in just a little over a decade has grown over 40 million%, our eyebrows tend to raise a little bit and we perk up. So the big question becomes, if it's grown 40 million%, has the ship sailed? And Rachel, maybe you'll find a Rogers diffusion of innovation curve. I think there's a real simple metric to look at and think about, and it has to do with how much of the world has adopted Bitcoin. And there's kind of levels of adoption. You could save some money in Bitcoin. Eventually, we'll have the ability, I think, to use Bitcoin in our everyday transactions using something called the Lightning Network. But right now, we're at the early adopters phase. So you could look at that. The blue line is a classic bell curve, just kind of breaking up the innovators, early adopters, early and late majority, and laggards. But the yellow line has more to do with the overall adoption. Now, what's interesting is that because Bitcoin is a network, so let's I might run out of paper here in a minute, but because Bitcoin's a network, if the adoption of Bitcoin looks like an S, networks actually grow exponential in value. So the value of Bitcoin is actually going to go like that, and it doesn't really. It's likely to just be a very long-term hockey stick, but that's because we're looking at a linear chart. So now let's pull up that chart of Bitcoin, Rachel, and we'll kind of explain a few things. Why don't you pull it up first in the linear mode and like zoomed in?
Okay.
To like maybe 1 day candles or 1 hour candles.
Okay, one moment.
So when you open up charting software, by the way, here we're looking at TradingView. When you open up charting software, you're just going to see this kind of mess of red and green candles and go, what does it mean? And the truth is nobody knows. With Bitcoin, the does it work question is, first off, we have to recognize, does it work for trading? Yes, a tiny percentage of people take other people's money in a zero-sum game called trading. So trading is very similar to gambling, and professional traders are basically professional gamblers. And the top fraction of 1% of traders are making money consistently. Everybody else is losing money, just like in a casino. So it doesn't really work widely for trading. It could work, just like you could maybe win a gold medal in the Olympics, but that's a pretty low probability. It's a lot easier. So winning with Bitcoin trading maybe is like that. You just have to all of a sudden become elite. I'm not a trader. I don't think it's worth the stress to even be a trader. We're not really going to talk about trading. Does it work for masses to make money dependably with trading? No, nothing does. Does it work for investing, which is a long-term endeavor, where we're making a long-term bet where we can have more of an advantage in the probabilities of winning that bet? Yes. And the way that we look at it as a long-term investor is you need to zoom out. And on this charting software, you need to press the W candle, which means one week candles. And then now you can zoom out and see the whole history of Bitcoin, or at least back until about 2011 when we started getting data on it. Now, this just looks like a volatile asset class that kind of goes up and down and goes in bubbles. That's because this chart is actually visually deceptive. All linear charts of Bitcoin are visually deceptive. To correct this, it's almost like putting on our glasses to correct our vision. You would click the log button on the bottom right, Rachel. Now, what story does that tell? That tells a story of something that's going up and to the right. And anything that goes up on a log chart is actually increasing exponentially. Something that increases just a little bit, like the stock market, on a log chart would look basically flat. It would just barely not be flat. Anything that actually goes up at an angle over the long term in a log chart is something that's exponentially increasing. So if let's dovetail this with the Rogers diffusion of innovation curve. Can you go back and forth between that real quick? Right. So if we're at the early adopters, what we've seen so far has come from the adoption of the innovators, and we're in the early phase of early adopters. So the majority of the growth in the Bitcoin network has not happened yet. And what that means, if you go back to the price chart, is like you have to zoom out by scrolling down on your mouse and make room to the right of the chart. So now scroll to the right, and now grab the axis on the right where the price is. Grab that on the top, and then pull it down a little bit. Down, yeah, and then down more. Okay, so now if we really want to know where this is going, it's this trajectory. So Rachel, why don't you pick something that looks like it's on that trajectory in 2026, and then tell us, put your mouse like yeah, maybe even lower, because it's like a logarithmic regression curve. Now, what number are you on?
$62,760.
Read it more carefully.
$627,260.
Right. So the ship has not sailed. What we're dealing with here is we are dealing with an asymmetric bet. Okay. So our brains do something funny, and you can make that smaller now. Our brains do something funny when we get excited about an opportunity. We want like a false sense of certainty, like it's going to be a slam dunk, like a guaranteed to win bet. Bitcoin is not a guaranteed to win bet. It's basically a technology that's either going to go to zero or either going to go much higher. Our research indicates, maybe north of $1 million. And by the way, I don't think we've said it yet. We have our disclaimer. This is not investment advice. This is education. The goal here is not for you to make decisions solely on what you saw and heard here today. The goal here is for you to become a smarter investor and take action steps at your own risk and your own reward, doing your own due diligence and letting us help save time, right? So if you're going to make moves with Bitcoin and they're going to be well informed rather than like hasty and potentially regrettable, then that's something that either takes a lot of time or it takes somebody like us shortening that learning curve for you, which is hopefully what we're doing today. So now the question becomes, where is it going? Now there is actually a pricing model that we can touch on that so far among institutional investors, Wall Street investors, has gotten the most attention. And that is called the stock to flow ratio. Rachel, why don't you pull that up? We have a chart that essentially, with a great question earlier, what about mining? Well, mining is flow. Okay, mining is flow. Anytime, whether it's gold or Bitcoin or anything, anytime new supply is discovered or created, that's flow. That means we're flowing new supply to land in the pile of existing supply, which is stock. So you have a ratio of stock to flow. So with the dollar, we had maybe $80 trillion of dollars floating around. That's a really rough estimate before COVID. After COVID, a lot of monetary policy is done in secret. If we look at 2008 and kind of compare it to 2000 now, we could maybe roughly guesstimate that that there's been like $20 trillion of various currencies printed. So our fiat currency stock was 80 trillion, and then now we have maybe 20 trillion of flow. So if you take 20 divided by 80, that's a 25% inflation rate, right? So that's a low ratio of stock to flow because there's a lot of flow. When you have less flow and something is more scarce, like Bitcoin, your stock to flow is higher. And so this anonymous researcher named Plan B published this model in March of 2018. No, I think it was 2019, March of 2019. And basically what we see is this turquoise line here on the screen is the model's prediction for the price. And as you can see, the Bitcoin price doesn't follow it exactly, but when it gets away, like if you look at in the times where it went above it, that's a bubble. That's when Bitcoin is getting ahead of itself a little bit. But look at the first major bubble in Bitcoin. What was the price there, Rachel?
$3.81.
So let's grok that for a second. Bitcoin, if you bought Bitcoin at that moment,
or wait, let me see. Let me go to the very tippy top. $19.02.
If you
go to the
bought
very
Bitcoin
top
at that moment, you bought it in a bubble at $19. So if you were the worst luck investor, I hear this all the time. Oh, I buy high and sell low. Well, not with Bitcoin, you don't, because if you hold it long enough and it continues to succeed, which its chances of failure get lower and lower day in, day out. If you buy it at the absolute worst time, it just means that it's going to take a little bit more time for you to be in the green, according to this trend, at least. And then the next bubble tops out at what? That one.
$801.60.
Right. So Bitcoin, again, was in a bubble at $800, but how many people here would love to have the story about how they bought the Bitcoin bubble at $19 and $800? Now, what about the next bubble? $18,000, right?
Yeah.
So same thing. So if you bought every single one of the local tops of the Bitcoin bubbles in the past, you would be extremely outperforming the world's largest hedge funds in 3 single transactions. You could have bought Bitcoin at these worst times ever 3 times, gone into hibernation like a bear, come out and been the best investor in the world if you're going to compare yourself to Warren Buffett or even Paul Tudor Jones or Ray Dalio or any of these guys. So something special is going on when you can outperform teams of thousands of researchers just by doing the right thing even at the wrong time. So when we come back to, does it work? Yes, it works to secure itself. It's never been hacked. Does it work? Yes, it works to process transactions without people's involvement. It even processes more transactions than PayPal. Does it work to capture value? Yes. And if we go back to that stock to flow chart one more time, Rachel, everybody wants to know how much higher could it go? And the stock to flow chart only measures supply. It doesn't measure demand. According to just the fact that it's capped at 21 million, and we know how much Bitcoin is printed to pay the miners, We know exactly how much that's going to be for the next all the way until the year 2140, at which point there will be no more Bitcoin printed. If we go to 2026, what does the model, which has been highly accurate so far, say about that price?
It says it will be 1.3 mil, almost $1.4 million per Bitcoin.
Right. So that's where we are potentially heading. This is no promise or guarantee, but this is an asymmetric bet. And at this point, this asymmetric bet has been more profitable than any promise or guarantee you can get. You can go get a promise or a guarantee from an annuity, and it's going to guarantee a negative return net of inflation. So, we don't need guarantees right now. What we need is worthwhile bets. And our view is that Bitcoin, if you do your research and understand it and can get an understanding and get some comfort, then there's some percentage that is probably a worthwhile bet for you. And if you're conservative, if you're very conservative, you have a low risk tolerance, that doesn't mean that you can't get Bitcoin exposure with that low risk tolerance. It means that you can't stay exposed to the infinity supply of dilution and devaluation of your value of your assets. If in the old way of thinking, if you have a low risk tolerance, you put everything into a savings account or a CD. That is actually the worst thing for somebody who has a low risk tolerance, because that guarantees loss of purchasing power. So at this point, it's like the whole risk management concept is turned on its head. And even the most low risk tolerance investor needs an allocation to Bitcoin once you understand what Bitcoin is and that it does work to secure itself, to be a monetary network for the future that already works today and captures value. Questions about that before we head into can I do it? Because this is all great, but it does nothing for you unless you take some actions and get yourself some Bitcoin, which requires an action plan that we will talk about shortly.
Yeah, I think we have a couple of really good questions here from our attendees. The first question comes from Glenn, and Glenn says, a general question: what's a good news feed or author or researcher that's good and crypto specific? I'm reading Bloomberg and typical news feeds like that daily.
I think that what you need is not right now is not a news feed, but a couple of cornerstone writings about Bitcoin that are timeless. The news feed question is it's really tough because there's not anything out there that has a high signal to noise ratio. Everything is very noisy, giving you tons of information, and then there's these little nuggets, and you have to find them for yourself, and that's basically like work that makes it not really easy to recommend. We're working on actually a news feed like that right inside of our Solo 401k dashboard that will be launched later this year. But before you get there, you really need to read the seminal works. And that is a couple of things. Number one, and Rachel, you can look these up and provide the links in the chat, by Vijay. I forgot his last
Bullish
name.
case for Bitcoin.
Yeah, the bullish case for Bitcoin. The bullish case for Bitcoin is it's an article, so you can read it in one sitting, and it gives you a pretty high-level understanding start to finish. I would say that's the number one thing you should read. It's actually just been turned into a book. I got an early signed copy. I think it's in the mail right now. Vijay Boyapati. Okay. So yeah, this is great. I think this is the starting point. If you want to go a little bit deeper, you can read a great book by Saifedean Ammous called The Bitcoin Standard. Fair warning, this is a great book, but the author has since, I think, devolved into like a really argumentative tone on Twitter. So I wouldn't like, he's the messenger. Don't kill the messenger, because he's kind of turned into a little bit of an online troll.
It's
But
like Nassim Taleb, right? Great books, but he
well,
has a little bit of a troll presence on Twitter.
well, it's actually between both of them. They used to be friends.
Yeah.
And
The opposite, yeah.
and then Nassim Taleb got caught up in these other cryptocurrencies that are scams, and he lost all his Bitcoin. And then he got mad, and then he started writing a bunch of nonsensical stuff, just trying to be critical of Bitcoin. But
Yeah.
he's basically just now an angry old man who lost all his money to stupid moves. So he didn't attend a webinar like this. If we could have just gotten him on one of our webinars, then he could have stayed on track, because he also wrote some really great books years ago. Anyways, don't necessarily follow the author religiously, but that's a great book. I think those are the starting points. Keep it simple. Read those two things. Now I have 3 other books that if you read these 3 books, you will know more than anyone else you know about the world, money, and where everything is going. And these 3 books are, number 1, The Starfish and the Spider. We can provide a link
I'll
and
pull
show
that
that on the
up. Yep.
screen. The Starfish and the Spider is the book that tells the story of how decentralized systems are taking over. And the Federal Reserve is a centralized system. Bitcoin is a decentralized system. Like eBay, Amazon, Skype, all of the things that have like grown up as big tech winners, they've decentralized something that used to be centralized. And this book basically tells you about how decentralized systems are strong and resilient and anti-fragile in ways that can sometimes beat out centralized systems and be unstoppable. The next book is How Innovation Works by Matt Ridley.
I'm reading that right now.
This book is a must read. You might even start with this book. It just came out recently. He's also the author of Rational Optimist and many other books. Very smart guy. You read this book, and what you realize is that innovation is unstoppable and everybody hates it. The acceptance of innovation that we get comes after it's already done. All the way back to coffee in like ancient Greece or Rome or something like that. Coffee was illegal the way that heroin is illegal right now. And it was talked about like it was heroin. And there are downsides of coffee, but it doesn't need to be illegal. Half of you wouldn't even made it here today without your coffee. And same thing with when the Wright brothers were inventing the airplane. Society wasn't there clapping. Society was there lying, defaming, character assassinating. The news was ignoring the flights. When they flew, the newspapers said they didn't fly and that they're just some fraudsters saying they flew. Like there was a long arc before the license plates started saying first in flight. Okay, and before it was first in flight, aren't we so great, an innovative species? It was basically like these guys could never possibly fly because they didn't go to college. And also the government gave tons of money to this other guy to get him to make an aeroplane, which is what they called it then. And if the government backed this guy and he couldn't make it work, then nobody could make it work, right? So like Satoshi Nakamoto inventing Bitcoin, very much like the Wright brothers, and it's not just the Wright brothers, it's actually the Wright siblings. There was a sister that was instrumental to the whole success story there that got omitted from most history books. So How Innovation Works, it's going to show you that if you go back to the things that have become ubiquitous, electricity, automobiles, coffee, the internet, everything, vaccines, all of them, all of these things, when they were being innovated, were blasphemy. They were hated. They were bastardized. And so if you're right now, as investors, we have one job. It's to protect and grow our wealth. That's 2 jobs, I guess. We have 2 jobs: protect our wealth and grow our wealth, protection of principal, and to outgrow the rate of inflation. So if we're going to do that, we have to invest in innovation, and we can't ignore innovation, because innovation is taking legacy assets like Sears Roebuck and Kodak and is destroying them. It's eating them for lunch. If you have these old things in your portfolio, or if you just have anything in your portfolio that's going up from inflation and you think you're doing a great job, you need to zoom out and recognize innovation is disrupting everything. You need to know how innovation works. And the number one rule of innovation is, if you're investing in innovation, everybody's going to laugh at you, make fun of you, and attack you. And you've got to learn how this works so you can develop a thick skin. So, are you going to get attacked by somebody if you tell them you invested in Bitcoin? Of course, you're going to get attacked. But if you read how innovation works, you can get the confidence to know that it's okay. Those attacks are going to fail and the innovation is going to succeed. And you have to become a believer in innovation and know how it works. And then the last book that I'll recommend is The Price of Tomorrow. We did a podcast with its author, Jeff Booth. Maybe, Rachel, you can go to selfdirectedlife.com and provide a link to that podcast. It was a great conversation. I really like Jeff. I think that we're going to look back on his book as one of the most insightful books ahead of its time. And his book is called The Price of Tomorrow. And it's really just about understanding money and how tech is deflationary and the Fed is inflationary. And there's this behind the scenes struggle that's eventually going to break off in one direction of hyperinflation or hyperdeflation. And when that happens, you want to own Bitcoin. With that said, let's move on to, do we have questions that we needed to cover? Let's cover them.
Yeah, we have one more question that I think is actually going to bring us right into another topic. So this question comes from Steve, and he says, will the U.S. government regulate Bitcoin? And I think that this is a great intro into touching on the infrastructure bill. Of course, that was in the news, and crypto was a big part of the conversation being included in this infrastructure bill. So maybe, Jeff, can you take us through, and for those of us that are newer to Bitcoin, maybe don't understand the regulations around it, will the U.S. regulate Bitcoin? And then how does that lead us into the infrastructure bill conversation?
Yeah, great question. So Bitcoin isn't people. Bitcoin is a piece of software. It's a piece of software so revolutionary. What other piece of software that nobody runs has a ticker on the bottom of the financial news? So Bitcoin is a revolutionary breakthrough that is software. There are no people that operate Bitcoin. It's a piece of software that runs itself. And it follows the code. And the code cannot be altered by a person or a group. So regulations are placed on people. So the government can regulate people, but it can't regulate Bitcoin. Because you could think about Bitcoin and its blockchain and its hash rate and its security. You could think about this like this is a new digital frontier. It's almost like a land that we discovered that nobody can get to. It's like this digital frontier that has like an exoskeleton in the form of its network security and its high hash rate. And everything inside can't be touched by government. So everything outside can. So, corporations that do business that are involved in Bitcoin, they're outside. So an exchange like Coinbase, it can be regulated. And, actually for the last 7 years, they've been begging to be regulated. Inside Bitcoin, the things that matter, the 21 million, the processing, the uptime, the what it does, these cannot be regulated. The only thing that can be regulated are the Bitcoin ancillary businesses. And actually, the regulation of Bitcoin is something that you've seen. It's like, hey, we're going to regulate Bitcoin. And Bitcoin has just been going wild. It's going up. It's because there are a lot of businesses, especially big ones, that really want to integrate Bitcoin into their business model, but they just can't do it. Their board of directors won't let them do it unless some regulations clarify things for them. The Congress can regulate things in a way that's probably mostly positive, that just clarifies like, yeah, you can do this. But they can't really regulate Bitcoin in a way where they say you can't have Bitcoin any more than they can say you can't breathe air. So when you really understand it, especially from the starfish and the spider, Bitcoin is a starfish. If you try to kill it, and let's say you go like, I'm going to cut its head off. If you cut off some piece of the starfish, you're going to end up with 2 starfish and double whatever the problem was you were trying to get rid of. Companies and corporations are like spiders. You can cut its head off and it dies, right? So, and the government itself is a spider too. All centralized organizations are spiders. So you just have to like protect that head and hope that nobody cuts it off. To that extent, there's really no chance. There's a very low probability, like way under 1%, that the government could do any regulation that cuts off Bitcoin's head because it doesn't have a head. I think the bigger issue with the infrastructure bill is that the United States is hanging in the balance of a falling empire, and China is a rising empire, and China wants to run the world, and they're a communist authoritarian regime. So if China wins and runs the world, it's an existential threat to humanity. It's an existential threat to our ability to be free people and reduce poverty through capitalism, which is what capitalism does, and just be able to flat out live our lives peacefully. People should be able to live their lives without being interfered with, as long as they're not interfering with others. And China is not in support of that at all. So I think we have a very dark future ahead if China wins. And I think actually Bitcoin is one of our only hopes. I think Bitcoin.
So I'd like to jump in here. So just to catch everyone up to speed, this infrastructure bill has been proposed as a bipartisan bill. Largely what it is supposed to be discussing is roads, bridges, ports, ferries, updates to our infrastructure, right? The way that we run our society. But what got tucked into this bill was a definition of a broker, and what they're trying to do with this piece of language that was slotted in is saying that if you're deemed to be a crypto broker, then that means that you are now responsible for doing a lot of government filings, issuing 1099s, things like that. For companies like Coinbase, not an issue. They're already collecting information on their customers. They already have all the trading information. That's not a big deal. What could potentially be a big deal here, and what a lot of senators actually have now vocally been proponents of crypto and Bitcoin, were saying with a proposed amendment, which was eventually shut down, is, hey, we have to really scale back this language, because if we're
So let's put it simply. These laws are being written by people who can barely even check their email, and they don't understand Bitcoin, and they're writing things that can't be done, right? So for example, right now Bitcoin is a great store of value. It's like gold, and it's in the process of maturing. So right now Bitcoin is like the Fed, but it's not like Visa. It's not there to like process your transaction when you go to the coffee shop. The transaction fees are a little bit too high, and it's more like the Fed. When you move Bitcoin, it's like sending a wire, but faster and cheaper, and nobody can censor you if they don't like you. We don't. If you pay us, if you buy one of our products, you don't have an account at the Fed, and we don't have an account at the Fed. So Bitcoin actually gives us direct access to like the base layer of the financial system. But as it grows and matures, it's adding the other layers, just like the Fed did, right? So when we go to the coffee shop, it's usually going to be like Visa, MasterCard, Amex, or whatever, and the credit cards can handle a lot more transactions than the Fed can. So the corollary to the credit card layer in Bitcoin is called the Lightning Network. And the Lightning Network is like another system of not miners, but node operators who basically set up their software. And then that software has a new technology, a second layer technology that makes Bitcoin scalable, potentially to process the transactions of the entire world for nearly free and nearly instantly. So the Lightning Network has been worked on for many years, and there's a lot of progress being made. Even the country of El Salvador has legally legalized Bitcoin in the form of the Lightning Network. So later this year, the country of El Salvador is going to run on the Lightning Network, and it's going to be on the world stage to show the world, here's the technology where there's not a country that can try to control the whole world's economy, and we have a free market, we have sound money, and a lot of the economic problems are going to be solved by this. So there are already Lightning node operators. It's very experimental. They're not to early adopters yet for the Lightning Network. They're at the innovators part of the Rogers diffusion of innovation curve. And the way the bill was written by people who don't even understand the technology was essentially requiring Lightning node operators to collect information on the identity of people that they've never met. This would be like if you have a website for your business, this would be like a law that says you have to report to the government the name, address, and social security number of everybody who visits your website. That's impossible. The internet is permissionless. The internet doesn't collect personally identifiable information when you log on to it. You can go anywhere and you just plug into the internet. It doesn't require that. And Bitcoin and the Lightning Network are like the internet of money. So it was essentially there was a lot of controversy because some people who do understand Bitcoin were like, oh my God, this is going to destroy Bitcoin. So it basically made it so that miners on the layer 1 Bitcoin and Lightning node operators on the layer 2 Bitcoin were all going to have to do something that was impossible, according to what they wrote in the law. And some people look at that and go, oh my gosh, that's going to send all of the innovation and all the Bitcoin companies outside of the US, and we've got like nothing left in the U.S. here. Like, we're not manufacturing enough. We're not educating at world-class standards. Like, what are we doing? Well, we're financial engineering, but the ability to do that is going to go away when the dollar is over. So in a post-dollar world, what's going to be left of the U.S.? Are we just going to be a crumbling empire? If innovation is run out of the country, the answer is yes. If innovation is welcomed, the answer is no. So some people are concerned that innovation will be run out. Other people just kind of laugh and say, like, how are you going to enforce it? How are you going to, like, if we told you that you had to collect the driver's license of everybody on this webinar just because you got on this webinar, and you can't do that, like, how are you going to be punished? And then, so it's an unenforceable law, but nobody really knows what that means. Does that mean that all of a sudden Congress starts losing more and more of its power because it's so out of touch, it writes laws that don't even mean anything? Or does it mean that some of these businesses are going to be run out? It's probably to some extent both, but either way, it's very concerning. And so a lot of effort came together in the Bitcoin community of writing these amendments to try to make the laws more reasonable and more welcoming of innovation, and just better for the economy of welcoming the innovation. If we outlaw innovation, then we're not going to have American values in America anymore.
I think that there's a couple of things to discuss here too. So number one, this is very interesting that we're seeing so many public senators coming together in very public support of crypto So that is great. That's new. We haven't seen that before. Secondarily, I think that it's really important that crypto is being brought into the general conversation. There's a lot of major heads of companies like your Michael Saylors and things that are saying, "Hey, we're not shying away from regulation. Let's bring this out. Let's figure out a common ground. Let's go ahead and get this going." Unsurprisingly, the government has sort of pendulumed to the extreme, trying to do transaction and reporting in a way they probably can't. But what I think is positive to this is it's certainly bringing the crypto into the larger conversation. And the price that we've seen, the Bitcoin price over the last couple of days, is demonstrating that the investors and buyers are not scared of this regulation being introduced.
And let's talk about what else is going on with the bill. So first off, also, there was originally like something like an amendment by Warner that was like terrible, and I think is probably a good guy, and he just doesn't understand the technology, which is very common. And then Cynthia Lummis, senator from Wyoming, who has held Bitcoin since 2013, so as long as me, who really understands it, she kind of spearheaded an amendment that, out of all of the options that Congress could go in, was by far the best option. But one senator who wanted an extra $50 million for war spending wanted the Loomis Amendment, but he was the one senator or congressman, I can't remember which, that voted against it just because he was mad that he didn't get, and I think he's 80-something years old, that he didn't get an extra 50. He's already, I think, getting money for war spending that he wants, but he wanted 50 million more. And so he voted no on the Loomis Amendment that he wanted, just to spite everybody for not giving in to his demands for more wartime spending. So, it kind of highlights here that, we've got a spider that's trying to regulate a starfish. So, bad legislation, I think, can be short-term bad for Bitcoin, but I think that bad legislation is long-term bad for government. I think the government is going to lose its power if it writes laws. I think writing a law that's unenforceable cedes power. It tells the people of the world, this Congress is out of touch. They're becoming not the government. And I think that, hopefully we don't see that. So yeah, let's move on.
Let's talk a little bit, about
it?
practical solutions. And I do want to start with one question that we have here from JJ as we're going to start talking about solutions. What are pros and cons of holding Bitcoin directly rather than in an ETF vehicle, which seems to have less friction or cost?
Sure. Well, in an ETF, you don't hold Bitcoin. We'll keep this one pretty simple. In a way, when we look at infinity, the infinity of the Fed historically sometimes means that we might see the Fed go under. And in fact, it's actually not the first central bank of the United States. I think it's like the third or the fourth. So like all of these things, the reserve currency status, the Federal Reserve itself, the fiat money status, these are all fleeting. They're all temporary. So one of the allures of Bitcoin is it's its own financial system. And if something really bad happened with the old or with the legacy financial system, like for example, why did all those bailouts happen in 2008 and 2009? It was because the Fed and the Treasury were concerned that the whole system was going to collapse if they didn't do it. And they're probably right. The whole system probably would have collapsed. Even if they were wrong then, they were right with COVID, that by the time that COVID happened and the system was going into a deflationary crash in March of 2020, the system would have collapsed if they hadn't gone in and done more bailouts. So for a lot of people, because there's not a single historical incidence of this kind of approach working endlessly, it works temporarily. Everyone's going like, what happens at the end of that infinity dollar system? And one of the possibilities is like an actual bona fide collapse of some sort. So who knows if this will ever happen? But one of the allures to Bitcoin is that the network processing transactions and being secure has zero dependencies on the legacy system, whereas an ETF is entirely dependent on the legacy system. So in a way, Bitcoin is like insurance of what's going to happen if the whole stock market were to implode. We don't really need to go down that rabbit hole of talking about it. It might be a low probability, but no matter how low the probability is, it's not zero. And Bitcoin is kind of the only island that we can retreat to. So if you have an ETF, you're not on the island.
So it's kind of similar to buying gold, right, Jeff? Like in terms of you can buy gold ETFs as well as you could buy, physical gold bars, gold and silver coins. In the same way, like if we buy Bitcoin as a promise to get Bitcoin, that's not the real thing. That's not the actual. That's not actually
an IOU. You bring up gold. I was trying to make a super short answer, but I want to unravel that just a little bit. So, a lot of people call Bitcoin digital gold because there's a lot that we know or can estimate about Bitcoin's, status and its future based on gold. So if we go back, all these infinity fiat monies have failed, but when they do, the island has been gold. And it's because gold doesn't have counterparty risk. If you have the gold, you have the value right there. But an ETF is like you can have the real thing, you can have an IOU, or you can have a gambling ticket. And the real thing with gold is the physical gold in your direct ownership. Either it's in your possession or it's stored with a trustworthy storage facility. You can have an IOU, which would be like, say, Sprott Physical Gold Trust. So the symbol PHYS for physical. That's something that I haven't actually tested it, but in one way or another, it's redeemable for gold. That's not as good as having gold, but at least you theoretically could redeem it. And the dollar used to be a gold IOU. Then the kind of most removed thing is a gambling ticket where somebody has just constructed a game with some like numbers, and it's basically just like going to the horse track. But at the end of the day, you don't own the horse or the track or anything. You just have exposure to a bet, and you can close the position out just like going to the cashier in a casino. But going to the cashier in the casino doesn't give you the rights to own the casino or own the landowner or own anything, tangible. Bitcoin is like a digital tangible meaning that you can actually have it, digitally tangible, but not physically. And so an ETF, most ETFs that I've seen, they're just the gambling exposure to the price. I'm sure at one point we're going to have some that will be redeemable. So like an example of the IOU is there is one of the futures markets for Bitcoin is settlable. You're able to settle it in Bitcoin. But yeah, I think the best bet is the real thing, because you have the Bitcoin, and the only counterparty you might involve is, again, a trusted storage facility, somebody who's going to hold and protect the Bitcoin from you or for you. And you don't need, you kind of want to put it into what's called cold storage, because if you're holding it for long term, it's just like gold in a vault. You're not trying to trade in and out of positions.
Let's go ahead and then transition into some solutions. So some takeaways, action items that our attendees can do today. So the first thing we want to talk about is, if you don't have any Bitcoin yet in your portfolio, it's definitely something that you want to consider. It is a nascent asset class. There is some price volatility, so you want to ensure that you're using or allocating an amount from your portfolio that you're comfortable with, seeing those price swings going up and down, but it is something that you should consider having exposure to in your portfolio. The easiest way to get started is to open an exchange account. And these days, there's lots of exchanges that are available to you: Coinbase, Bittrex, Gemini, Kraken. Especially if you are just using your own personal non-retirement funds, you can usually get those accounts open in really just a few minutes. So that's one takeaway to begin with.
Did you
If
just
you
say you
don't
could
have
get the
any
accounts
Bitcoin yet,
open in a few minutes?
if you are using personal non-retirement funds, yes, that's
Which
correct.
exchanges are currently running at a few minutes?
Coinbase. Yeah, you can open a Coinbase personal account in like 10 minutes.
Okay. I would put an asterisk on that just because we're getting all kinds of emails from people where it's taking weeks or months in some cases. I know some of those might be non-retirement accounts, but we don't want to give unrealistic expectations.
Sure.
These are companies. It's not like Schwab, where you can call up to a call center and have a pretty well-paid, well-knowledgeable person to help you through things. These are apps. So the plus side is when they work, they're easy to use. But the downside is when they don't work, there's really nobody to talk to. So I think what we want to do is acknowledge that the end game of what you probably want to do is basically have a long-term stored position. And you can get there by first buying it at an exchange and then moving it off the exchange into either self-custody or professional storage. And then the other path, which is one that we've created with our Bitcoin Pro Storage program, is buy in professional storage directly. So when you go to open an exchange account, all of these companies are apps, not like with Fidelity or TD Ameritrade or any of these companies. You can call them up, you can talk to somebody, you can have a financial advisor, all of that. We're not there yet in the crypto world, and the exchanges aren't like that. The exchanges are more like Robinhood, where they have an automated system of opening a personal account that Rachel was referring to. And sometimes it works. Usually it works. Sometimes it doesn't. But I think the important thing to know is that you should not keep your money on an exchange, generally speaking, because if you can access it, it also means that somebody could hack your password and they could access it. The exchange itself could potentially get hacked. The exchange itself could get potentially targeted for government overreach. So, Bitcoin sitting on an exchange is not. It's also similar to that ETF in that it's an IOU, because the exchange has everything pooled together, and they might be lending it out to people, and there are certain risks there. So I think we want to start with the end in mind. You want to get a long-term position where you either are taking self-custody or professional storage. For most people, I wouldn't recommend self-custody for your main position. Maybe a small experiment is fine. But with self-custody, if you make a mistake, you could easily lose your Bitcoin, even without somebody hacking it. With professional storage, you have a company like ours that is professionally storing it for you, and you can't accidentally lose it. So those are kind of like some of the basic steps there. Rachel, anything else you wanted to add in here? So I think with our professional storage program, that's kind of like the easy button. We can get an account opened in within a couple of days for everybody. And then after you get the account opened, whatever support you need, then you just reach out to us. Rachel, back to you.
Yeah, so first things first, consider having some Bitcoin in your portfolio. You can start, as Jeff mentioned, with self-custody, opening an exchange account, and that can be done at any of the major exchanges for personal funds and retirement funds. There is a special process if you're opening an exchange account for an IRA LLC or a 401k trust. So it's important that you follow those rules. Alternatively, our professional storage solution is a great option to consider. Again, as Jeff mentioned, those accounts get opened in just a couple of days. I do see some questions coming in about Bitcoin, specifically on 401k trusts. We probably won't have time to get to everything today, but what we will do is we'll do a follow-up session where we can specifically talk about Bitcoin in your 401k or your IRA LLC
also,
with
you can
us.
have a follow-up call with us. You don't have to wait for the follow-up session. We'll talk about that in a moment. So let's get to the questions.
Sure, absolutely. One moment, let me pull these up here. So the first question comes from Jace. Do you have a preferred exchange for a solo 401k holding Bitcoin in cold storage or hardware wallet dedicated for that solo 401k? I think, Jace, what you're asking, is there a preferred exchange for holding BTC? And then what is the preferred hardware wallet for holding crypto in a 401k trust?
Yeah. So again, I think these are your options. You can start by going the exchange route. A lot. So if we look at the comments here, Tracy said mine was very fast, so that's great. Martin said I opened one in 10 minutes a few days ago with Coinbase. That's great. Martin also said Kraken took 1 week to open and 1 week to fund. Glenn said, I had a couple Coinbase setup issues. They're getting better about solving issues, but it's all done via email, still no number to call. Issues resolved in 2 to 3 days. The other thing also, so ultimately, the time that it takes to open an account with an exchange varies. If you were trying to open an account like a month ago when Bitcoin was lower price and less people were trying to open accounts, it was probably faster. If you are trying to open an account while Bitcoin is in the middle of a parabolic run up on a huge green candle because everybody's buying it at the same time, that's when it can take weeks, or we've even seen months in some cases.
Glenn said it took him 4.5 months to get the Coinbase Prime account open for the 401k trust.
So I don't want to just look through everything at rose-colored glasses here. And I also don't want to just promote what we have because I think it's a great solution. But you can do whatever you want. We just want to help you understand the options. We wouldn't have created our Bitcoin Pro Storage program if the existing options were really great. I think the existing options are good, but not great. When you're trying to get Bitcoin, what matters is just getting Bitcoin. But after you get Bitcoin, what matters is being able to manage it, move it if you want. And that's, I think, where this model can get a little problematic, is that, like a lot of times when people want to do something, or if you get locked out of your account, a lot of times that kind of thing happens when there's the most crypto activity. The other thing too is because so many people use these exchanges, when there's a lot of activity, like a big trading volume day, they all go down. I mean, it's like a joke in the Bitcoin community of like, oh, we had a really high volume day today. We know that because Coinbase went down. The last time that this happened, it was actually all the exchanges. It was a couple months ago, and there wasn't a single exchange that didn't go down. So I think we just want to understand that exchanges are one place where you can get your crypto, but they're not a great place to hold your crypto. If you do use an exchange, it should be seen as a stepping stone because of the risks involved. They're not optimized for long-term holding. They're optimized for trading in and out like gambling. So if you do use them, you want an ultimate home of self-custody or professional storage. Self-custody is like a hardware wallet is a good option. That can give you your own cold storage. You hold your own keys. The pros of holding your own keys is you literally don't have to trust anybody other than yourself. The cons are if you were not worthy of that trust that you placed with yourself and you mess it up, the Bitcoin is gone forever, even if it was supposed to become worth $1 billion. So for my recommendation, we've been teaching this for years, is put a small amount. Like let's say if you're gonna put $50,000 into Bitcoin, put maybe like 5,000 in self-custody so that you can experience self-custody, learn a little bit about holding your own keys, and just take that responsibility without necessarily, risking all of your Bitcoin on that. and then maybe put the rest, like maybe 45,000 in. I'm not telling you to put 45,000. I'm saying in our example of 50,000, put the majority somewhere where it's going to be safer from the risks that you have with self-custody. With self-custody, if you lose your device, if you lose your keys, which are like a backup phrases, then you lose your Bitcoin, and you don't have that risk over here. You can even have insurance coverage as well with professional storage, which we have with our program. So I think that, and this is general, right? If you're like a cryptographer or a computer programmer, and like we have a Lightning node operator that commented here earlier. If you're a Lightning node operator, I'm sure you're pretty comfortable with more self-custody. But I think everybody should do both, and the scales should be tipped based on your own honest assessment of your technical capabilities. If you're not deeply technical computer programmer, then the majority should probably be in professional storage of some sort or another. And Rachel posted the link there. You can learn more or fill out your application. And if you fill out your application, then you can talk to us. We'll talk to you about it. We won't necessarily open your account right away. We are there to answer questions as well. And if you don't have any questions, then that could be a short chat of like, okay, you're ready to go. You understand this. So if you want to learn more, just go to neighbors.com/Bitcoin Pro. And let's take just a moment to answer like maybe another question or two.
Okay, I think we've got time, yes, for one more question. Jay says, can your retirement trust purchase a hardware wallet like a YubiKey, or excuse me, like a Trezor and a YubiKey for 2FA with its own funds?
Yes, but so the Trezor is where you can have multiple accounts. So if you have a Trezor, so my recommendation would be this. If you have a Trezor and all you're going to put on it are retirement funds, then yeah, sure, buy it with retirement funds if you want. I mean, it's only a couple $100. Personally, if you buy it with your retirement funds, you're taking a couple $100 that could have grown tax-free, and you're spending it on something. So generally, I think you're probably better off just buying the Trezor with your taxable money, because that's money that isn't special for tax-free growth. Additionally, if you have a Trezor, you can have one account inside of it for your retirement account, another account for your taxable money, another account for like your kids or your mom, or like having a Trezor is like being your own bank. You can create an unlimited number of Bitcoin bank accounts on your Trezor. So if you're going to have more than one account for not just your retirement funds, then you would not want to buy it with your retirement funds, because then your retirement funds are technically giving you a benefit outside of the retirement funds. So yes, you technically could do it if you only used it for retirement funds, but for both of those reasons, it's probably just better to do it with taxable funds. Same thing with YubiKey. If you're only going to use that for your retirement funds, then yeah, sure, buy it with your retirement funds. But once you get a YubiKey, you understand how it works, you might want to use it for multiple things, and for that reason, you should probably buy it with taxable money.
Well, I think that's all the time that we have for questions today.
Philippe has an interesting comment here. He says, I have a horror story about self-storage. Oh no, we haven't heard this. Please tell me that whatever you lost, Philippe, was a small portion. But yeah,
this is not the only horror story we've heard about self-storage over the years, unfortunately.
Yeah. The reason that we promote this, and the reason that we do this, it's not like a big moneymaker for us. It's that like we think you should be a long-term holder. That's what we encourage, and very very few people are like already. If you do self-storage, just getting a Trezor is really not good enough today. What you really want is you get multiple Trezors and put them in multiple locations and have what's called multi-signature storage, and then you have redundancy, so that makes it that it's less likely that you're going to lose your keys. It's also still less likely that you're going to get hacked. In fact, if you get attacked and your Trezors are in multiple locations and you have multi-signature storage, the attacker's not actually going to be able to get the Bitcoin. So this can get a little bit complicated. And, putting a small amount means that you can like experience self-custody and learn a little bit about technology without risking that much of your money. If you put most of it in professional storage, like Philippe is a, kind of, I guess, living case study for, then you all of that is already just taken care of for you without you having
we're also seeing here, Philippe says he's been living in the doghouse for a while. Even Glenn was saying his husband is a computer engineer. That's why he feels comfortable self-storage. I would not do self-storage if not for him. So let this be, and I know we do have a couple of attendees that are on here. Jays, I think you were running your own node. Like, we certainly have different varying technical capabilities. So if running your own node, Trezor, hardware wallet, cold storage, these are old terms to you, you feel super comfortable navigating complex technological processes, then sure, cold storage might be something that you're looking into. But if node, hash rate, all that stuff starts going whoosh, then maybe consider something that's going to be a little less intense on the old heart and mind when you're putting together this portfolio.
People do want to learn more. Usually a smart person will be like, oh yeah, I know just enough to be dangerous, right? So like,
yeah.
What is that called? The Dunning-Kruger Effect, right? Like when you, for some people, when they start learning something, then they think that they know more than they really do. And so you just got to be careful with that. I mean, I've been dealing with Bitcoin for 8 years, lots of different wallets, and accounts at all the exchanges, including institutional ones that aren't open to the public. And I still have the majority of my Bitcoin in professional storage. And I develop software and am semi-technical. I don't write software. I head up a development team where we're building some new software that we'll be able to show you guys soon. So like, you literally need to be coding and dealing with Bitcoin all day, every day for the last 3 years, I think, for it to be even remotely suitable for you to go primarily to self-custody. This is an area where the tech is going to get better. And this is one of the, you don't want to buy something when it's already mature. Right? If you bought Amazon when it's already mature, then you bought Amazon at like 2000 or whatever. But you could have bought Amazon at a split adjusted price of like $1 if you had the vision. So we're at a point now where we're all here, we can see the vision, but we're still early enough that we're probably more like Amazon circa 2004 than we are Amazon circa 2021. And if you go back to 2004, not everybody was bullish on Amazon, and its technology wasn't that great yet. So we are in the early stages here. I think the wallets and the self-custody are going to get better. In fact, I think if the government cracks down in any way, then the self-custody innovation is just going to happen, where people do hold their crypto themselves more. So, okay.
Well, thank you so much. That's all the time that we have today. Thank you so much for joining us, everyone. We will definitely be continuing more of these presentations in the future. I know that they're really helpful for you. And if this was a lot to take in, because we did cover a lot of material today, you can access the replay on our Solo 401k network at solo401k.net. We'll put the replay up for you as soon as we are finished up here. Have a wonderful rest of your day. Thanks so much for being with us, everyone. We'll see you next time.
Thank you.